You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional-grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. That music means we are back once again. It is Wednesday. Time to roll out the Futures Rundown, see what is lighting up the tape in the explosive world of futures. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you were binging last year. Welcome to all of you folks who joined us as this show kicked off in the tail end of 2024. A great new addition to the network. You forced me, kicking and screaming, to talk some futures, and I am very glad you did. If you want to talk some additional content, including, of course, great pro Q&As and options oddities, giveaways, all sorts of fun, theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us for this hot new edition of the Futures Rundown, I'm pleased to welcome back on for the first time in the mad new year of 2025, our old pal, Mr. Dan Collins. Dan, welcome back to the Futures Rundown, sir.
Hey, Mark, it's good to be here.
How are things in Collins land, sir?
A little cold today, but seeing I'm in my basement, it's okay.
Yeah, they always say, the best futures talk comes out of basements, right? That's the hot place to sling some futures. And let's sling some futures indeed, sir, as it is time for the Trading Pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the Trading Pit.
All right, everybody, let's do it. Let's kick off the Trading Pit. We actually kicked off the year going deep into precious metals. That's just how the schedule worked out, listeners. But now it is time for us to cast our gaze backwards to the mad, the tumultuous, the wild year that was 2024. Let's kick things off, Dan. I want to get your thoughts on what resonates to you in the second. But first, let's go atop and bottom 15, shall we? For in terms of names that gained the most and gave up the most last year. I will do one of them first, and we'll get some of your thoughts. Let's go out to the dark side first, because why not? Let's start in the red. Number 15 in terms of names that lost the most in 2024, listeners. Number 15 to the dark side would be palladium, actually. Off nearly 11%. We were just talking about this on the Precious Metals show last week. A rough year for palladium, coming in off nearly 11%, 10.96% to be precise. Number 14, listeners, we've got the Ultra T-Bond off 11.21%. Number 13, it was a rough year for rough rice, listeners, off 11.25%. Number 12, we're keeping it in the world of ags. We're going out to soybean oil, listeners. Soybean oil giving up a little over 12.02% to be precise last year. From the world of ags, we go to the Mexican peso, listeners. Number 11, giving up 12.42%, so almost 12.5%. To the dark side. Number 10, listeners, our bottom 10 for the year, keeping it in FX. It was the yen, off 13.5%. Number 9, listeners, we're going to the world of steel, in particular U.S. Midwest steel, off nearly 14%. We all know there was a lot of political skullduggery going on in that space last year. Blocked acquisitions, threats of tariffs, all sorts of things weighing on steel, coming in off nearly 14% on the year. Number 8, back to the ags. It is cotton, listeners. Cotton number 2, to be precise, off 14.21%. Number 7, listeners, keeping it in the ags. It is the hard red wheat, not the soft red wheat. It is the hard red wheat, coming in at number 7, off 15.92%. Number 6, keeping it in the more traditional wheat, listeners, off 17.14%. So a rough year for wheat, pretty much in general, listeners. In fact, I think you're going to see a lot of ags in our bottom 5 here, listeners. Spoiler alert. Number 5, though, bucking the trend, we've got the Brazilian real, so FX sneaking in to the bottom of our bottom 5 there, listeners. Brazilian real off 17.17%. Number 4, back to the ags. It is soybean meal off 17.21%. Number 3, soybeans straight up, listeners, off 17.58%. Number 2, the spring wheat off 21.1%. And our number 1 loser for the year, listeners, our old pal, uranium, taking it on the chin off 24.23%. Dan, it was a wild year in futures. What stands out to you as I run down that list of losers, sir?
Well, the losers, I guess the largest one, the uranium, you have to kind of put on the Ukraine war and sanctions on Russia, and that's something that's likely to change. You have a huge list of commodities and commodity currencies too, kind of involved there too. So the retreat on inflation may be attributed to that, just kind of maybe a correction over the really high inflation of 21 and 22 and 23. All these things, and it's relevant because they can return with talks of tariffs and things. So I think that's where I kind of see it.
All right, now to the green, to the winners for the year, listeners. We'll do a top 15 as well. Why not? Number 15, listeners, the U.S. dollar index gaining 6.38%. So a decent year out there in the land of the dollar index. Number 14, to the world of energy we go. It is crude oil, up 8.6%. Number 13, good year in the equities. We all know this. The Russell 2000 up 8.79% here. Then number 12, we have the S&P, not the big S&P 500, but the S&P mid-cap E-mini. So taking a subset of that, listeners, that was up a little over 11.07%. Number 11 was Class 3 milk. So back to the land of dairy, listeners, up nearly 16%. 15.78% on the year. Number 10, our old pal, the S&P E-mini, up about 20% on the year. Number 9, back to dairy, cash settled butter, 20.61%, a hot year for butter, a hot year for dairy listeners. Number 8, our old pal, the NASDAQ 100, up 22.3%. Number 7, talked about this last week on the show. It was a good year for precious metals. Gold coming in at number 7, up nearly 25%, 24.47% to be precise. Number 6, it was silver, listeners, up 24.98%. So gold and silver moving kind of in lockstep over the course of last year, and both finishing up nearly 25%. Our top 5 now, listeners, to the realm of Bitcoin. The Bitcoin futures over there at CME finishing up about 35% on the year, giving back, obviously, some of that upside they had towards the end of the year. Number 4, we have OJ up a whopping 64.95%. Number 3, it's our old pal coffee. Man, just a banger year for coffee. 73.1% weather, droughts, all sorts of things impacting that number there. Number 2, keeping it in dairy, it's Dry Whey, listeners, up 77.85%. And our number 1 winner for the year in the world of futures, just a wild year. We talked about this product a few times. Might need to go deeper and maybe dive deep into the contract specs as well, because it was a hot year for cocoa, up 194.46%. So just a wild list from starting up about 6%, 6.5% to ending up nearly 200%. Just a wild year across the board. Mr. Dan, what stands out to you from that list of winners, the gainers of the year, sir?
Well, right at the top are a lot of the softs, and it seems like with so much geopolitical risk out there that maybe that's a little bit safer, because that's not what you necessarily think of. Though orange juice is a very interesting market going forward when we hear about potential tariffs, because that would be a target for retaliatory tariffs. But with a lot of the gold and silver, you would think with uncertainty coming up that they would be strong again, but you're at a real high level. So I think you're maybe you're kind of looking to see some sort of a dip to get back into those markets. But I'm interested in the softs because they're a great market mover, and maybe a little bit outside of some of the risks that we see coming with the change in administration.
All right, Dan, we broke down some winners, we broke down some losers. Outside of those names I just kind of ran down, what else stands out to you? What trades, what trends, what developments really stand out to you as you look back at the wild year of futures that was 2024, sir?
Well, just, equities staying strong, and you're waiting for, where it's going to go next. I think it reacted well to the election, but there's a whole lot of risk out there, and it's coming really fast and furious to see what happens in the first 100 days. Same thing, I think you have to look at the safe havens. Crude oil, with promises to drill, actually look kind of stable among the markets into 2024.
Would you say, is the equities the one thing you're focusing on most these days? Are you getting lured back into crude oil? Where would you say your attention is fixed in the futures game right now?
I think it's just on upcoming volatility, and with equities and and the dollar. It's good to see the dollar change in administrations. Usually Republican administrations like to keep it lower to help with trade, and obviously trade is a big wild card with promises of tariffs.
That is the case, sir. If you want to know how last year shook out from a volume perspective, we don't have all the numbers in hand yet. We got the numbers coming out of CME. Obviously, they're only one venue, but they're a pretty big one. So we can look at some of the trends they noticed there. I also like to look at the broad global volume perspective. Folks like FIA do a great job of kind of breaking down the global volume trends. That report is not yet out. So as soon as we have that in our hot little hands, we will dive into that. But obviously CME, a good indication of where the volume is going these days. They had a banger year, as you might expect. Annual average daily volume, 26.5 million contracts in 2024. That's up about 9% from 2023. So a pretty good year, all things perspective. Do you want to break it down in a little bit more detail, listeners? Which complexes were driving that flow out here? As you might imagine, Fed was a big story last year, so rates were looking pretty hot last year. ADV in the interest rate complex up 10% to 13.7 million contracts. Now that includes futures and options. We're going to drill down to mostly futures for this, even though they did record annual U.S. Treasury futures and options ADV of 8.1 million contracts. Again, not surprising. You hear us break down the numbers here on the show every week. You hear the 10-year up there. You hear the 2-year. You hear the 30-year. These are hot SOFRs up there. So a lot of action there. Speaking of SOFR, record annual SOFR futures and options ADV of 5.2 million contracts. If we drill down to just the futures, the 10-year had a record as well, ADV of 2.3 million contracts. Again, that is average daily volume. So putting up an average of 2.3 million 10-year futures a day, listeners, nothing to sneeze at. The 5-year, 1.7 million, and the 2-year, about 1 million ADV. Dan, any surprises in there, or did you kind of expect the interest rate complex to have a banger year when the Fed was driving much of the narrative?
Well, they always do. What strikes me is just across the board the strong year. Interesting with that continuing because we're once upon another competitive challenge to CME Group to their interest rate complex, which would be a big story in 2025. Particularly when you see that the main competitor has friends in high places, let's put it.
That is indeed the case as we keep on rolling, listeners. It was a banger year for equities. Did we see that reflected in the volume over there at CME? The answer might surprise you. The answer is kind of no. Now, obviously, this is coming from CME, so they're going to put their best foot forward and only talk about their record numbers. So things that aren't included on this list, you can kind of reasonably assume didn't maybe have a banger year. In fact, the overall equity index average daily volume only up 2% over there at 6.8 million contracts. That's kind of surprising when we saw really robust growth on the equity options side. Certainly, we saw those numbers coming out of OCC, and those numbers looking very strong, including in a lot of single names and in the equity indexes and in the ETFs and in the futures that they clear over there as well. So kind of interesting that the overall equity index complex ADV, it's still up, but it's only up 2% to 6.8 million contracts. The only contract that they call out here, listeners, are the micro E-mini NASDAQ 100. That ADV increasing 23% to 1.3 million contracts on the futures. Now, those are micros, so take that with a bit of a grain of salt. But you don't see any highlights here for the S&P. You don't see any highlights here for the Russell or the big NASDAQ. So kind of surprising. Dan, are you surprised that the equity futures maybe didn't deliver the whammy some people expected this year?
No, I mean, you're looking at a late stages of a bull market where people are getting a little nervous and maybe they're just kind of waiting to get somewhat of a pullback to get back in because you saw the good volume in the option. So obviously, people are maybe protecting their profit modes and needing some sort of a pullback to get back in.
What about energy? Energy had to deliver a banger year last year, right? Listen, there's a lot of going on in the energy, a lot of brouhaha in the Middle East that usually translates to some vol and some action in the energy complex. Let's see if that was the case last year. And at least for some of the big contracts you may look at, it was the case. And the overall complex did pretty well as well. Energy ADV up 17% to 2.5 million contracts. So that includes everything. Annual nat gas futures ADV, that was a record. 566,000 contracts, and that is a lot. The options also ADV of 242,000 contracts. So nat gas driving a lot of flow last year. Nat gas was a beast, but it wasn't just nat gas. WTI looking pretty hot last year as well. The futures ADV up 4% to 983,000 contracts. That's a lot of paper for WTI, and again showing maybe a little bit of tumult in the Middle East, leading to a little bit of volume increase. Overall, Dan, the energy complex up 17%. A lot of that carried on the back of nat gas, but WTI also delivering last year as well, sir.
Yeah, I mean, this is always an active that this is always an active space. And I mean, with that gas, I'm having a hard time looking back to see what weather events, but that's really a weather market when you get some shocks, especially during build-up season. And crude oil is just a beast.
WTI is a beast. We talked about the ags having an interesting year last year from an overall performance perspective. Did that translate into some volume? Well, in certain areas, the answer was yes. Talked a lot about the different aspects of soybeans, listeners. Annual soybean futures ADV record 277,000 contracts, so that's up. We also saw corn futures ADV increasing 21% to 402,000 contracts. So two highlights there. The overall ag complex up 13% to a record ADV of 1.7 million contracts. That's obviously everything, listeners. That's wheat, that's corn, that's soybean, that's everything added together. So kind of interesting, corn and soybeans, though, Dan, kind of stealing the at least volume highlights from last year, sir. What are your thoughts?
Well, they're the major players in there, and you probably saw some profit taking because we finally saw the quelling of a little bit of the inflation and people getting back in. It's it's an interesting complex because it's always been an inflation play. We saw efforts for the outgoing administration to kind of tamp down inflation, which they did. But it's still there, and you have the conflict. Ukraine has become a big player in ag, so that affects that as well. So there's a lot of different factors playing on this.
One complex that came on the radar of a lot of people last year, especially with all the election talk and then the threats of tariffs and everything else, and of course the big unwind, the carry trade that crushed the market back in August last year, was FX. Usually a sleepy complex, except for when things like that carry trade debacle happen. Then all of a sudden, all eyes are on FX. And that turned out to have a little bit of an increase out there in overall ADV for FX, up about 8%. So overall ADV in the FX complex, about 1 million contracts a day now. So a decent increase, all things considered, for a usually pretty sleepy complex. Some of the highlights, the yen obviously saw a lot of action. Obviously, the yen was the catalyst. Many people point the finger for that massive unwind back in August. Yen futures ADV, that's up to 182,000. That's a new record. Canadian dollar, again, all this back and forth with Canada over tariffs. The Canadian dollar futures also record ADV of 101,000. And the peso, our neighbors to the south, also record volume there of 73,000 contracts a day for the future. So, Dan, are you surprised that those big three, the yen, Canadian dollar, and the peso, kind of dominating the growth for FX last year?
Oh, well, not really. I mean, one, it's such a huge complex that you have to kind of, you're not going to see the, double-digit growth because it's just huge, right? But there's some of the themes we're talking about. We're talking about potential tariffs that's going to affect Canada and Mexico hugely. They're commodity currencies, particularly Canada, and I think you had the Brazilian real was on that list earlier. So that unwinding the carry trade had something to do with maybe breaking the back of inflation, which is on us. So this is a complex to keep an eye on.
Speaking of complex to keep an eye on, listeners, we talked about it last week. Metals, hot year. Did that translate into a lot of volume? The answer was a resounding yes. Overall, metals average daily volume, again, this combines everything, so futures and options, up 23%, record 736,000 contracts a day. So nothing to sneeze at out there in the metals side. A couple of records here as well. Overall, metal options ADV, 117,000 contracts. Kind of interesting. Again, we mostly focus on the futures here, but interesting there. Also, micro gold futures hit a record annual ADV of 105,000 contracts. And our old pal copper. Copper, usually a byword for what's going on with the Chinese economy and Chinese demand. Copper futures ADV up 12% to 121,000 contracts. Now, what are you not seeing in there? You're not seeing big gold. You're not seeing silver. You're not seeing a couple other contracts you might expect. So interesting overall complex growing, and a banger increase in ADV, 23%, but maybe not all the products you might expect hitting that record territory. Dan, what are your thoughts?
Well, I mean, just look at the pricing, right? I think some people got pushed out of big gold into micro gold because that's the the margin levels. You look, it's been straight up for a while. So I think that's attributed to that. But it's a story of inflation. It's also the story of safe havens, and with a lot of volatility this year and more volatility expected. It's another sector to keep an eye on. I mean, I think people you like to see some sort of a pullback, and then you'll see a massive, I think, entry into gold and silver. And like I said, the smaller contracts, I think that's just based on the size.
Yeah, that big gold contract, quite a lot for many folks to bite off these days, with gold hitting new record highs out there throughout the year. Let's keep rolling. Speaking of things that hit new record highs, listeners, you can't ignore crypto in that conversation. Just a banger Q4, and if it gave some of that back towards the end of the year, but still a banger year. And that's reflected in the volume over there at CME. The ADV, now again, take these numbers with a grain of salt because they're starting from a pretty low baseline. But that volume more than doubled, up 203% in 2024 to 117,000 contracts. Again, when they're quoting notional values, that things still aren't that big. That's adding up everything they have. So the micro Bitcoin, the large Bitcoin, the micro Ether, and the large futures, and of course the options on all of those as well. A couple of records, annual micro Bitcoin futures ADV 48,000, micro Ether ADV record 41,000, Bitcoin futures ADV of 16,000, and Ether futures 6,400. Now that may sound impressive, but we've been talking for a while on This Week in Futures Options. I just can't find the volume there in those products. Even on weeks when Bitcoin's setting new records, blowing through 100,000, we're seeing a lot of talk, a lot of interest in Bitcoin. Some of the other products that trade around Bitcoin doing a lot of volume, but the futures and the options over there, for whatever reason, not following suit. So Dan, an increase of 203%. It looks awesome on the page, but obviously you're starting from a pretty low baseline there, so that makes that number seem a little bit more, outstanding in contrast, sir.
Yeah, price discoveries and futures isn't the area where it's a large complex and it's just getting started. So it tells you what's going on in the market, and of all these things, this could be the most interesting complex. And though I wouldn't recommend people get involved in it, but it's because there's a lot of drivers going into this year with cryptocurrencies and the regulation of it. That's gonna probably increase activity, but also increase volatility.
Keep waiting for this complex to really explode, and so far we haven't seen them. Obviously, 203%. It's obviously good, but you're starting from a very low number.
I think explode could be a double entendre there.
Yeah, sometimes careful what you wish for in the world of crypto, but yeah, a little more volume I think would be nice. Improving liquidity across the board, always a good thing at the end of the day, especially from our perspective on some of our other shows coming in on the options front. If you're wondering, CME mostly domestic, what do they have to show on the international front? About 14% of their volume, so nearly 8 million contracts a day, goes up in the international market. So that's a growing percent for them. If you're wondering what the highlights were internationally, energy strong, up 31%, metals up 27%, ags up 25%, and interest rate up 12%. And it is international after all, so FX products up 10%. So a little bit of a sliver. We'll do a deeper dive down the road when we get broader numbers from FIA. They kind of like to break down a lot of great global trends in the overall derivative space across a variety of marketplaces, not just CME. So be interesting to see what's going on out there. Dan, anything else leap to mind for you as you look back at the overall volume trends of 2024, sir?
I don't know. I'm thinking it's the calm before the storm.
Oh, well, interesting. That certainly would mean a lot from an overall volume perspective. Really quickly, because we already have been talking for a while about all last year, it's obviously an interesting start to the year from an overall markets perspective. Markets are swinging pretty wild. We saw vol come roaring back to life and then get cut in half again today, coming on the heels of that inflation number. Right now, this week, what's lighting up our tape out here, listeners? We've got some pretty hot action, including number 5 to the upside this week. We got crude oil up 7.38%. That's WTI, of course. Number 4 to the ags we go. It is oats up about 8.25%. Number 3, our old pal nat gas up 9.33%. Number 2, heating oil. Number 3 at 9.23%. Number 2 is nat gas up 11%. And number 1, soybean oil up a little over 12, about 12.2%. Dan, anything catching your eye in those folks lighting it up to the upside this week?
Yeah, no, well, not really. You got some ag products. There's usually, traditionally it's the quiet period. So I'm not sure what's causing that.
That's the fun part about it. Coming out of the gate like a lion this year. We have done that the last few years, really. We're the beginning of January. You're right. Traditionally a quiet period the last 3 or 4 years, not so much. Lots gone on in the first couple of weeks of January, and we are seeing a repeat of that again this year. To the red, to the downside movers we go, listeners. Number 5, back to dairy. It is cash settled cheese off 5.35%. Number 4, it is sugar off 5.48%. Number 3, it's OJ off 6.05%. Number 2, it is sugar number 11 off 6.34%. So number 4 was sugar number 16, if you are so intrigued, listeners. And the number 1 downside mover this week, listeners, is lithium, giving up 6.73%. Anything catching your eye and what's lighting up our screen to the red this week?
Yeah, it was interesting that the OJ came down because that's maybe that's the sort of tariff if we don't find markets for it. I think probably looking to stabilize that price a little bit.
Before we dive into some of your questions, listeners, let's look at the overall trends here as we're seeing so far a wild start to the new year. Obviously, this is our first real full trading week under our belts. Last week, of course, closed for the Carter Memorial on Thursday. The week before, of course, a truncated holiday week. So now our first full trading week under our belts. How are these markets shaping up so far for the year? Let's do a quick top and bottom 5 here as well, year to date. Let's kick things off in energy, listeners, to the upside. Brent up nearly 9%, 8.9%. So a strong start out of the gate for crude. Right above it, listeners, we have WTI up 9.52%. So energy coming in hot yet again. Right above it, we have our old pal. We have the heating oil up 11%. Number 2, it is nat gas up 13.36%. Can anything trump energy to kick off the new year here, listeners? The answer is yes. It is soybean oil up 15.58% so far year to date. So a wild start in energy and a little sprinkling at the top there of soybean oil. All right, to the dark side, to the red we go, listeners. What is giving up ground for this new trading year so far? Number 5, our old pal sugar, number 16, off a little over 4, about 4.17%. Number 4, we've got soybean meal off 4.42%. Number 3, our number 1 mover for this week, number 3 overall year to date, it is lithium off 4.66%. Number 2, the other side of sugar, number 11, off 6.44%. And after having a banger year last year, giving up some of that ghost, cocoa off 7.23%. That said, listeners, you have a year, you gain nearly 200%. I think you'll be okay giving up a little over 7%. Dan, any surprises for you in what's lighting up the tape to the light side and to the dark side to kick off this mad new year, sir?
Not really. I mean, after real mild fall and beginning of winter, we got hit with some cold weather in the last week, and that kind of the story on the energy complex. Obviously, there's something going on with the crush trade with the oil, the soy oil rising and the meal going down.
All right, listeners, let's keep on rolling. Let's get some of you on board with the new year. A little bit of your futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, listeners, let's do it. Let's unleash you folks here on the show here. Let's go out to our live chat first. We got one of our pro members here, Age Del Aquarius, saying his wild guess for this year is that options on futures will increase in volume for low dollar retail accounts as they can be traded without pattern day trading rules. You know, we have seen an overall strong trend across the board in all options, equity options, but also options on futures. I just broke down some of that. Didn't do all the volume numbers for options, but obviously it was a strong year there. But I think you're probably onto something, but retail in general is becoming more accepting and more interested in a broader array of products than they were in the past. In the past, it was S&P, it was your Apples, it was your Teslas and Nvidias, and maybe a little smattering of gold and a few other things. Now, these days, they're looking farther afield. Nat gas is so active. A lot of folks are hitting us up about nat gas these days. Obviously, crypto, you can trade those on the futures and on the option side as well. Metals, obviously. There's a lot of ways you can carve that up. So I wouldn't be surprised to see that. Dan, what are your thoughts? You think the lack of pattern day trading rules in futures options will make them even more palatable to retail in 2025, sir?
I think so, and I think the main driver is, well, you saw some of those increases. So the margin requirement is heavy, and there's just so much uncertainty out there that I think people want the security of options, want some of the risk management benefits of options, because there's a lot of risk out there.
We also got some jokesters in our chat, Dan. They're saying it's all the low carb dieters that's killing rough rice for the year. So there we go. That's what did it. Why not? Sure. Everyone's cutting carbs, rice, taking it on the chin. A rough year for rough rice, Dan. Was it a rough crystal ball poll for us listeners? As you know, every year we do our crystal ball contest where we let you folks participate, guess where VIX will close at the end of the year. Last year we had a hot one. 3 folks getting within spitting distance, with 2 of them within our margin of victory, and I was generous to the third. He was 0.01 away beyond our margin of victory. So I said, you know what? You get the grand prize too. Why not? So 3 effective winners last year, which is a record for us. That's especially going out a full year to predict VIX. That is nothing to sneeze at. Dan, we just kicked off our contest for this year last week. It will run through volatility views on Friday. So if you haven't gotten your VIX high, low, and close, you get 3 swings at the bat this year. We upped it to 3 for you listeners. Pick the high, pick the low, pick the close. If you hit on one of those, you can win fabulous prizes, listeners. But we also had a poll go along with that, Dan, that just ended. We gave you a little fun flavor poll this year, listeners. We said, hey, choose your flavor, I should say. Choose your flavor for VIX end of year closing price range. Gave you 4 different ranges. Is it going to be a very spicy year? Going to be like a ghost pepper year, so VIX is going to close north of 20? Or is it going to be more of a spicy habanero year of 16 to 20? Or is it going to be a little milder, a little maybe mild buffalo year of 12 to 15.99? Or bland oatmeal? And Dan, our audience is feeling spicy, north of 20, 33.3%, sir. Does that surprise you?
Not at all.
So you know what's coming next. I'm going to ask you next.
The Reaper pepper at, over 30, that would have received significant votes, I think.
You think we're closing north of 30 next year?
Wow. I have no idea what would close, but I think we'll be above it at some point.
I'm going to say to you, Dan, I'm going to give you a chance to play along. We're giving all of our network co-hosts and guests a chance to play in our contest. Last year, our winner was Steve Sosnick from IB, even though I have to say I was a close second. I was right hot on his heels, Dan, with my end-of-year prediction. Nobody else was within a country mile, so it was pretty much me and Steve Sosnick holding down the roost, even though he did get a little closer than me. So, Dan, if you want to participate, maybe get your name enshrined in the Volatility Crystal Ball Hall of Fame, for next year, what do you got for us? What's your prediction for a VIX close for next year? If you want to do high and low, you can as well.
Well, I'll say 28.
We're going to close at 28. Wow. Feeling spicy.
I think it's going to go significantly higher at some point. It can spike and challenge. There's just so much out there that's going to create volatility this year, and a lack of faith in the markets. And so I don't know. That's coming down. I know at some point it'll be higher, but
wow, you think a spike to north of 60? Beyond that? 30? What are you feeling? What's the high for you?
Well, what's the all-time high? Was it like 52 during the?
It got up into the 80s back in the Volmageddon time frame.
That was like one day.
Yeah, exactly.
I think it'll hit 50.
50. Okay. And I'll put a high of 50 for you. All right, Mr. Dan, good luck. Maybe this time a year from now, I will be inducting you into our Volatility Crystal Ball Hall of Fame as we keep on rolling. Got some more questions here before we got to get out of here for this week. Dan, we got this comment here from this Lieutenant Tim, I guess. He says, really enjoying the new Futures Rundown program. Well, thank you, Lieutenant Tim. He says, so glad you decided to add futures to the network for grunts like me. Oh, he is a lieutenant. You just answered the question I was going to send in. Why the heck are the months out of any semblance of order? Yeah, we talked about this with, I believe it was Dan Gramza about a month and change ago, talking about the contract month codes and how just completely asinine they are and how they make no sense. He says, my 2 cents on why they skipped R, S, and T is that they obviously realized that they had screwed up with the alphabetical order and just decided to make things line up for Z in December. Yeah, I think that's what I said on the show too. I think by the time they got to the end, they realized they can't start with A, they have to at least end with Z to have some semblance of order to the list. So I think you're right. They just kind of cut those out of the list so they could just get to Z and get the whole just embarrassment over with. Dan, what are your thoughts here for our buddy Lieutenant Tim? Have you thought about that? The origins of the contract month codes and futures, why we don't start with A, why they skip letters like R and T, and then they go to Z at the end?
I think it has something to do with at some point this was explained to me, but I'm talking many, many years, many decades ago, and I have no clue to remember it why. But I think it has something to do with the contract letters and to avoid confusion.
Speaking of confusion, there's a lot of confusion about this, Dan. This question came in a little towards the end of last year. He's from Charlie Nance. He says, can you explain the controversy over CME filing to become an FCM, aka a Futures Commission Merchant, if you don't speak the lingo, listeners, on the Futures program, please? Thanks for putting this out on the show. Yeah, this came out right around late October, early November of last year, that CME got approval to establish themselves as an FCM, what is effectively a broker in the future space, listeners. I think to say the response to this was mixed is putting it mildly. We took a screenshot of the top headlines from the day that the news broke. Here's just a few of them. Clearing members rattled as CME approved to launch its own FCM. That's from risk.net. Here's Crane Chicago Business. CME wins Futures Commission Merchant approval, sparking backlash. Finance Magazine. CME Futures Commission Merchant approval raises conflict of interest questions. So, yeah, I think to call this controversial is to put it mild. They released, even folks that we talk about, FIA, they crunch a lot of numbers. They're an industry advocacy group, and they crunch a lot of the data for the space. They released a statement on it. They say their approval is the latest and most significant example of a trend that raises serious concerns about market regulation and systemic risk. The approval comes at a time when they've yet to propose strong rules to address conflicts among CFTC regulated entities. They go on and on to say that they are strongly against that approval as well. So I think to call this controversial is to put it mild. Dan, you've been around the futures game for a long time. Why do you think this action in particular sparked so much backlash, sir?
Well, the controversy is easy. The FCMs are afraid that the CME is trying to disintermediate disintermediate them, and that's been a theme of markets for as long as we've known each other, going back to the the core retail commodity futures markets, where the introducing brokers to a great extent have been disintermediated. So maybe it's turnabout fair play for the FCMs. I don't know where it's at and what the goal is, but I brought up earlier there's another challenge to the CME largest complex from Howard Lutnick, who's I think has a position in the new administration, which would make them a little bit more nervous. So it is something in their back pocket to ward off competition. But it's it's a little bit dangerous because you can't unring a bell. So we don't know exactly what they're doing with it. It makes the FCMs nervous. But remember, the largest FCMs are signed up as part of that new exchange too. So I think it's just a response by CME to say you want to challenge our markets and create a new market. Maybe we'll keep your core customers.
Yeah, a lot of interesting stuff here. I think for me it goes back to that old separation of church and state. It's something we've complained about a lot in the crypto space for a long time, that there really are very blurred lines between an exchange, which to me should always be a regulated and separated pool of liquidity. That is the goal of an exchange at the end of the day, to provide liquidity and price discovery. And then the broker, whose job it is to go and get the customers and bring them into market and be the interface for them, between them and the market. There should be a separation between church and state for those, and we didn't really see that, and we don't see that in the crypto space. It's something that I've lamented. In fact, that is the reason that CME has put forward for their wanting to do this. It's SBF back in his FTX days was talking about becoming an FCM and kind of breaking into CME's territory a little bit. So they viewed this, as Dan said, as a bit of a competitive response, kind of something to keep in their back pocket for a rainy day should need arise. But as you're right, as this disintermediates a lot of their core constituents on the FCM side, it raises a lot of questions about conflict of interest. Whose interest are they putting first when they're the broker and they're the exchange? It's a kind of nebulous area. So that's why a lot of folks like FIA and others are also probably a little bit skittish. Thankfully, nothing's been done with this yet. They haven't gone out there and really established this FCM. They've just got approval for the license. But that's enough. As Dan says, you can't unring that bell, and that alone raises some specters of conflict of interest, which will be interesting to see in this new administration going forward, how all that is dealt with. Unfortunately, that music means we've come to the end. Man, Dan, we had a long run through the world of futures. We looked back, then we looked ahead a little bit. But before we go, Mr. Dan, if folks want to check out what you have cooking in the world of futures, where should they go? What should they do?
I don't have a whole lot going right now. I'm doing some work with Gate 39 and some of their customers. So we're working on some option strategies actually for them, and I will give you a heads up where it's showing up. But I don't. I'm working on them, but I don't know what platform we're going to present them on yet. But there are a couple of pieces that are upcoming.
Well, we'll stay tuned for those pieces, listeners. In the meantime, if you want to check out what's cooking over there at CTS Futures, only one place to go, ctsfutures.com, or you can search for T4 Futures and Options in just about any browser on the planet. That'll get you to that same spot where you can try a free month of their T4 Futures and Options tool. Kick the tires and light the fires on some of these products for yourselves. That's going to do it for us for our triple header on the network today. Double dose of options boot camp, followed by a futures rundown. So you got Dan cubed on the network today. If one Dan wasn't enough, you have about 3 Dan appearances on the network here today. So all sorts of fun. Back again tomorrow with the option block, as well as This Week in Futures Options, Friday vol views, and then we're back for our pro folks over there at theoptionsinsider.com/pro with a little bit of options oddities. Off for Monday. I neglected to mention that earlier. We are off for Monday for the MLK holiday here in the U.S. So another truncated holiday week. But we're back again next Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
Thank you for tuning in to the Futures Rundown, proudly sponsored by T4 Futures and Options. Experience the T4 Futures and Options trading platform with its seamless desktop and mobile applications, low latency, and professional functionality tailored for traders and brokers alike. Take advantage of T4 Theoretical Sheets, Strategy Solver, MBO, Advanced Charts, and much more. Empower your trading journey with T4 Futures and Options. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.